Hello, Cameron. Dr. Cameron Murray. I'm so
Oh,
excited to have you on. I haven't spoken to you for a few months, I think.
yeah. Well, thanks for having me back, Catherine. It's been interesting times, hasn't it?
It has. And the last time I saw you, of course, is when you came to Melbourne to do your book launch um, for your new book, which is called.
The Great Housing Hijack. Yeah, it's been
Yeah,
out
so,
since the
so
end of
excited.
February. So,
There you go,
uh,
your
been out
book.
March, April, May, nearly 3 months.
Yeah, which of course is recommended. Anyone can get it on Amazon. It reads backwards on the screen when I hold it up, but it's a great book. And I think I don't know how many people kind of read books. People are so used to reading blogs and everything, but when you get a book
Mm,
that goes into as much detail, I think people kind of undervalue the information that's in it. And that's why I always kind of like encourage people, buy the book, sit down, read through the book, because I think that, that experience, you're going to gain such a lot more from just kind of reading like little individual blogs on sort of what's
mm.
policy
Yeah,
wise.
you're right. I mean, that's why I wrote the book, Catherine, because I've been writing lots of articles on my Substack, Fresh Economic Thinking. I've written over 1,000 blog articles in the last decade, and um, I really just needed a place to put everything in one place in a coherent package for people. And I mean, that's the premise of the book. The debate's hijacked, and we're off sort of arguing about tangential things. So I figured um, it was my role to bring something coherent together in one place, and that's what you get in the book. So I hope people are enjoying it. Um, had a few interesting reviews. Brennan Coates at Grattan didn't particularly like some sections, but yeah, there's been other very good reviews, and it's selling well. And I think it's actually changed the way we talk about housing and supply and what we want already. So yeah, if your listeners are keen to learn, please go out and check it out. The Great Housing Hijack.
Yeah, you know what I really enjoyed most about when you came down to do, so you came down to Melbourne, obviously did kind of like the book launch and
Mm.
did it in Melbourne at RMIT. And I always just really enjoy those events. But what I really enjoyed most of all was how you kind of stood up and gave this speech. And within the context of the speech, you put into the ridiculousness of the repeating debate about housing affordability. Can you just remember what you were talking about with that? Like how we've always had this debate, is housing really sort of unaffordable kind of premise?
Um, yeah, let's see if I can remember what I said. How's that, Catherine? Um, I probably said something about Charles Darwin visiting Sydney in 1836. And instead of observing the kangaroos, the koalas, and all the wildlife, the guy's the most famous biologist ever. But the first thing he observed was the humans, and they complained to him about, and I'm quoting from his diary, diary entry from January 1836. He writes, "The number of large homes recently built is truly surprising. Nevertheless, everyone complains of the high rents and difficulty in procuring a house." I mean, this is 20,000 population of New South Wales in 1836. So what's going on there? Is it regulations? Is it taxes? I mean, there's no federal government yet. Um, so there's probably no property taxes. It's just trade, like taxes on imports and trade. So yeah, like it sort of reiterates that what we're seeing in housing is not unique to today. It's just that we're in a cycle and we always forget what happened last cycle, right? So in 1830s, there was a cycle, the 1870s, there's the 1880s land boom in Victoria, the 1910s in Sydney, right? 1911. So from 1911 to 1912, what was New South Wales doing? It was conducting its first inquiry into rising rents in Sydney, right? Like 115 years ago, 114 years ago, everyone was having this argument. So I think if you don't have that perspective, you can really get bogged down in nitpicky rent-seeking arguments that different interest groups today like to produce using this crisis or this cyclical housing pattern as a justification for why we need to reduce taxes on them and tax other people instead or deregulate them, all sorts of things, right? And I think that's a really, um, what would I say, a narrow way of looking at housing. If you zoom out, look at other cities around the world and look at other time periods, you'll really have a much more coherent view of what's happening.
That's the most powerful thing, of course, for my subscriber base, is seeing this as part of a cycle. That, I remember like putting up a cartoon. Can't remember where it came from now, but it was like the eternal newspaper, and it was like war in the Middle East. It was problems. It was just like you could just repeat that every single day, because
that's right. Like
what
that happens too, like new technology. So AI is going to take our jobs. There's a great guy I follow on Twitter, or X, whatever it's called these days. He's called his Pessimists of History, he's called. And he goes back to the archives of newspapers, and they're like, oh, printing press is going to make everyone jobless. Motor cars going to make everyone jobless. It's going to put the horses out of business. And, we have the same arguments. It's quite interesting how much they repeat. And if you haven't got that historical context, you're just going to be confused. And even now, it's not that difficult to understand what's going on with housing, because we have this idea that there's this surprise increase in how difficult it is to buy a home, and there's this surprise decline in new housing approvals. Well, okay, is that a surprise? Because for the last 2 years, we've been tightening interest rates. Why have we done that? We've done it to make houses expensive to buy and new houses expensive to build or difficult to fund. Like, this is exactly what we planned, because we know this part of the cycle, there was inflation, we had lots of stimulus, we wanted to dampen it. And now everyone's like, oh, I don't know what's happening. It must be the town planners or the NIMBYs or something. Come on, man. It's going on in the whole world. It's not the grandma down the road from you that's made the house price go up. There's a global macroeconomy doing its thing. There is monetary policy doing its thing. Please put this in context. It won't be like this forever. Please just have that context. And I think it's so hard for people. Sorry, I'm just going to have a quick rant. Sorry, listeners. I hope you enjoy it. But we have this habit of extrapolating these very, very short-term patterns in the economy and just drawing a straight line forever, as if the economy doesn't cycle and flow and adjust over time. And so we have things like, well, if building approvals keep falling, they'll be down to this. I mean, someone seriously said, oh, if this keeps up, we'll only build 2,000 apartments in Brisbane in the next decade, or some crazy number. I'm like, what do you mean? I can literally see 2,000 under construction today. You're drawing a straight line of something that's just temporarily dropped, and it's going to go through zero. Just keep going. Yeah. Same thing happens with fertility. There's been a decline. People go, well, if this continues, it will be negative. And like, it's not going to do that. Just look at the rest of the chart. It goes up and down. There are greater economic forces at play. So rant over. Do not extrapolate with straight lines, little sections of a big cyclical macroeconomic process.
Yeah, and of course, I think that's what's great about your research is unless you look back at history, you just can't see that within the context. And that's kind of the frustrating thing about today's debate. Everybody feels like they're the first ones to discover that we've actually got an issue with, rising land prices and what that does to the economy. And they kind of pile in on that one subject, and they can't see it in context.
Yeah. Well, that's right. And you've got to ask, okay, where is this point in history where it was all great? And they can go, oh, there was this period in the early 1980s before that boom got too out of hand. Oh, and there's this period in the mid 90s, and there was this period. I'm like, oh, that's interesting how you've found certain periods, but it keeps going like this through time, up and down. How do you know where at some absolute it's going to always get worse? Why won't it get better from here as well? Right? Yeah, it's very, very odd. And you see it so much. And I mean, even in my book, in The Great Housing Hijack, I go through in 1872, Friedrich Engels was writing about the housing question. Why is it that the working class in the industrial cities of Europe can't afford houses? I mean, 1872 in Europe. And somehow we're talking about, oh, it's the Brisbane City Council making land expensive. I'm from Brisbane, so that's my example. Like, hang on a minute. Is that what was going on in the 1870s in Europe as well? Like, can we try a bit harder at having a coherent view that maps this cycle that can apply in different cities and at different points in time. And anyway, I try and give you a coherent view in the book. I talk about the greater economic forces and why, for example, in 2020, everyone thought the property market would crash. And I said, probably going to boom because it was super low, right? The end of the 2010s, 2018, 19, it was a great time to buy. And I told a lot of my friends, and some of them actually bought houses, and they're like, thank God I listened to you. And I'm like, well, after a crash, we don't get another crash. We usually get a boom, and we've just dropped interest rates. So just it's a trick to thinking and understanding that, because in the time, everything at that time feels really big and important. It's very hard to keep that long-term perspective.
Yeah, I'm so glad you pointed that out, because I feel like that's everything about the service that I write, which is a bigger cycle and kind of acting against the herd. And yeah, I mean, I remember that in 2018, 2018, I mean, it was prior to me writing Cycles, Trends and Forecasts, prior to me working for Fat Tail, and I was just, doing sort of full-time advocacy work. And I was saying to everybody, it's a great time to buy. It's a great time to get in the market, particularly if you had the concept of a bigger cycle in mind. You just knew that it wasn't the end of the cycle. Everything wasn't going to go down. At some point, the switch was going to be triggered. And of course, it was. But I mean, I know, very good economists at that point in time that were warning people, do not buy, don't get into the market. So it's that contrarian kind of objective, which is obviously why I get you on here, because I think you're one of the only commentators in Australia. I think Australia has a lot going for it. We have quite a small population. And so when you get like a really good contrarian voice, thankfully it does kind of stand out from the crowd. It doesn't sort of get lost in the weight of the traditional economic analysis that overpowers it. So I really think that you've got, you're such a great resource to have there. And you're doing, you're helping us out at Prosper as well, which we're very honoured to have some of the reports that you're producing for us there. But I got you on obviously initially it was when it was budget night, and I thought, what can we do about budget, because it's so frustrating listening to the boring analysis that comes out from the budget, kind of like dumped on everybody's doorstep, and then we sort of carry on and we don't sort of get a contrarian view of it, which is why you're here. So you obviously listened to it. Did you spend your evening listening to the budget, or did you do something else?
No, look, I think my advice to people about the budget is to enjoy your life. There is, I tried to look through the politics of today at bigger economic trends, which means the more I follow what's happening day to day, the harder it is to let go of that and look at the bigger trends. So I don't follow it. I don't listen to it, because remember, the budget's not a promise. It's not a commitment. It's just a political tool to indicate perhaps a political intention or to test the waters. So I don't really need more of that in my life, right? That happens every day on the 6 o'clock news. Someone's floating some idea, debating some idea, talking about policy. That most budgets are wrong at the end of the day. So yes, it's a useful process if you are one of those people who want to follow the horse race of politics and which party's taking which positions and how serious are they about them. But that's not what I like to follow. And I thought, it actually makes me a little bit, what's the reaction? Seeing on Twitter, all these economists get swept up in the details that are so small and insignificant compared to the Australian macroeconomy and the macro trends. I'm like, guys, really? Do you think this budget and a few billion Aussie dollars here or there in spending spread out over 4 years that may or may not happen is significant to global inflation trends that we are a tiny little part of? We're a cork in the ocean of global inflation trends. And you got your microscope out looking at the cork and say, aha, the tide is turning. I'm like, come on, guys, let's just let this slide. The budget was fine. If your particular pet project wasn't in there or got cut, that's fine. Let's talk about that. But in terms of the macro economy, and a lot of people were concerned about inflation, it was too inflationary, too much spending. Well, again, Australia didn't cause the wave of global inflation. and we're not causing the unwinding of global inflation. If you just plot all the inflation, all the price trends around the world, they just track each other since COVID, right? So, I just don't see it being particularly important for that reason. And so that's why I try and keep my mind clear to focus on those bigger macro questions and not the who got a few billion here or there in each budget.
Do we need to worry about government spending, Cam? Do we need to worry about the government budget and the government going into debt and the...
No, well, this is the other thing, right? Like, I think we had was it a $9 billion surplus for forecast over 4 years or for the next financial year? I don't even know because I don't read it, but it was something like that. But here's the thing, that wasn't a policy choice, right? In economics, if you go do first year macroeconomics, you'll learn about automatic stabilizers. When you get an inflationary boom in the economy, taxes, because many taxes are set based on nominal thresholds, government tax revenue rises automatically. We actually saw record tax revenues from governments in 2023 financial year because people's income's inflated. When your income goes up, you pay more as a share in tax. And so this whole surplus thing, everyone's going, oh, Albanese's taking credit. Well, sorry, the global macroeconomy and the global stimulus and the global shock of COVID, that's who you can credit for the surplus. And at the end of the day, it wouldn't have even mattered if it was a $9 billion deficit. Australian economy is over 2 trillion, right? So that's only a fraction of a percent, right? Spread out over many years. So, yeah, I do find it odd how many economists really obsess over these tiny details that aren't particularly important. And remember, at the end of the day, governments can spend or private people can spend. Money just circulates between one pair of hands and another, right? So it's not super important whether a government builds a bridge or a private company builds the bridge and we raise revenue from tolls or we raise revenue to fund it from taxes. It's still a bridge. And we obsess about these funding arrangements when we should really obsess about what's an efficient way to invest. Are we investing in white elephants, or are we doing things that are going to enhance the productive capacity of the economy? They're the questions we should have. And for some reason, we get very distracted and instead talk about these niche funding arrangements which are often very equivalent to each other anyway. But we just have this weird personal attachment to, oh, I'd rather you fund that with tolls, or I'd rather you tax that, had a targeted tax instead of a generic, like broad tax. Queensland government, for example, wasn't there a proposal to give people $300 on their electricity bills? Was that in the federal budget? Because in the Queensland budget, they're giving us $1,000, I think. Did you know that?
No, I didn't. No, I think that's great.
Queensland government is essentially going to reduce their taxes, but they're going to do it on a $1,000 per household basis. And the implementation is going to happen by putting a credit on your electricity bill. So, and then the federal government's going to do the same thing. And so people got caught up in the details of that. Oh, is it fair? Should we have income targeting and this and that? I'm like, mate, it's all equivalent to just putting $1,000 or $300, so $1,000 for the state, $300 for the Fed, into one bank account per household. It's all equivalent. That's just what they're trying to do. And I think that's fine, right? That's helping every household by $300. It's just a transfer. There's nothing controversial about it. I just, we get bogged down on these things, and I'm a fan of simplicity, and I think it's a little bit overcomplicated, but actually putting $1,000, or sorry, the federal government's $300, right?
Yes.
Putting $300 in one bank account per household is actually quite difficult too, right? How do you know you're not going to get scammed and people will submit multiple bank accounts, etc.? Okay, so maybe an electricity credit is actually an efficient way to get $300 to each household. Maybe. Right? Let's just be reasonable.
Yeah, the interesting thing about this, of course, is understanding that ultimately there's only one component in the economy that is short in accessible supply, which is land. Which is why people are always wondering about housing affordability, because land prices in areas that are desirable which in Australia is really the capital city areas, you know, very well facilitated big cities is where we all live. We don't live in the center of Australia. You know, land prices are going to increase whether you know, no matter what you do with them. And so when you're giving people, you know, credits and you're putting money into the economy, then obviously that money at some, you know, if it's going to ease people's budgets, it's going to ease the budget of people that are investing in land. And that means that it is ultimately inflationary on the economy. If the government's taxing people more and taking money out of the economy, then obviously that's going to impede people's budgets, and that's going to have an impact on land prices. And in Victoria, you know, the moan at the moment, I think there's not a day that goes by where I don't get an email from somebody who's telling me that their land tax bill has doubled since, you know, Victoria put the thing up, and how terrible it is. And you know, of course, there's a increase in the number of listings that have gone on the market in Melbourne, which of course is what land taxes are designed to do. You know, they're designed you know, discourage investment, get people to offload properties, to lower land prices, to, you know, put the land to different uses, which is more for need rather than, you know, greed in lieu of speculative gains. So, you know, I'm sort of thinking, well, you know, all these policies, I mean, what you've just told me about, I didn't realize that was that you were going to be getting credits for your electricity bill, but that to me is almost great for the land cycle in that area. Is that how you would view it also?
Oh, look, I think, you know, $1,000 per household is pretty small in the grand scheme of things, and it's going to save people money over a period of time. I think, you know, we're in that last stage of the cycle where things that matter are kind of the creative financing arrangements. Not sure if you've noticed. So we've got, for example, federal government's got their shared equity scheme. We've got Commonwealth Bank announcing for $10,000 you can get into a home loan with $10,000, and they've got this new business called Co-Posit or something, which will lend you a deposit to go and bank with them, which is completely weird, right? Because Commonwealth Bank owns a different bank or a different financial entity called Co-Posit, and they're going to lend you the money, and then you're going to go back to the Commonwealth Bank and go, see, I've got the deposit. And the Commonwealth Bank's going to be like, oh, that's great. You're no risk now. I'm like, it's literally you lending them 95% or 99 or whatever it is. Like, what is this weird trickery you're doing, having this separate company that you own, lending them the deposit, and then pretending that you didn't also do that and it's a 99% loan. So we've got this era of creative funding, which also happened at the end of the 2000s. Do you remember that, Catherine?
I do.
There was a huge talk of rent to buy schemes in the private landlords, shared equity schemes, no deposit mortgages, paying your stamp duty, all of that stuff. It's like a last phase of the cycle pattern that we see. And I feel like I get flashbacks now when I see this. I'm like, oh, hang on a minute. Didn't this happen in the 2000s boom? Haven't we done all this before? So yeah, I think that's a much bigger factor than a little bit of more income. I mean, the new income tax thresholds coming in at the end of June, so stage 3 version 2.0 or whatever they're called, will actually have a much bigger effect on the nominal income of households, right? So I think that's going to feed in a little bit as well. People will be sort of saved by the bell, saved by the income tax cuts. Anyone who's financially stretched now might just keep going a little in the second half of this year and next year. So to get back to the cycle and then, you know, what we'll see in land now, you know, we have, I think it was the Commonwealth Bank come out and say, we're expecting a rate cut by the end of the year. And someone else came out yesterday and said, we might be in a recession by the end of the year. Did you see that, for?
I didn't see that, no. I mean, I know that the banks have been talking about rate cuts, gosh, since the beginning. Well, since they were all sort of talking about that they were going to happen at the end of 2023, and then it was going to be the beginning of 2024. You know, I mean, it's a little bit like, oh, inflation is going to start coming down, you know, so we've got on top of inflation, it's going to start coming down. But I mean, it's never been my forecast, because the forecast of the land cycle and also the commodity cycle is rising inflation to the end of this point. So, you know, I'd be surprised if it came down.
Look, it's really tricky from like, so just had to drop my son at school this morning. He's got a broken bone in his foot, and drove past the petrol station, and $1.81 for petrol,
Yeah.
$1.81.
Yeah.
I'm like, hang on a minute.
Yeah.
How is inflation going to keep rising? I paid $2.25 a couple of weeks ago. How is inflation going to keep rising if we can still get fuel for under $2? But then there's the puzzle of, well, hang on, isn't copper at record highs?
Yes.
The terms of trade is at record highs, so that's predominantly, resources. What's going on? We got sort of oil kind of tempered in its thing, but other minerals going up. We got general inflation sort of trending down, but then there's the flow through of rents. It's a pretty unusual time. My gut feel is, every cycle has differences but similarities.
Mm.
It's very, very tricky, right, to judge which is which, which should be the same and which is just a different variation on the theme.
Yeah.
And I think I'm with you that things will chug along a little bit longer than we expect. I remember being blindsided in the 2000s. So from 2005, I was thinking, God, this cannot go forever. It's all going to fall in a heap any moment. And it still took a few years. I was way ahead. There's this end cycle period that just drags out when how can people borrow money at 7% to buy a house with the 3% yield? Like, this can't go on forever like this. Something's got to give. But then it goes on for 2 years, maybe a little longer. And it goes on until everyone forgets and thinks it's going to last forever. And then it changes. Yeah, it's an unusual time.
Yeah, there's so much that you've kind of said in that last little bit. I mean, first of all, the finance arrangements at, toward the end of the last cycle, I remember that really clearly because I was working for a national buyer advocacy company at the time, and it was owned by mortgage brokers who were writing books on how to get kitty loans where you would borrow to get the deposit, and then obviously that would allow you then to get the finance from the bank. And I remember having meetings because where the way that we would get clients is that we would go and meet mortgage brokers who would give us leads for clients. They've got a client that wants to buy, why don't you use this buyer advocate? And so we would sort of court mortgage brokers. And I remember going to see one in the city, in this really old building in the city where the elevator took forever to kind of chug up to the second floor. And he was kind of in this office with all this stuff around him, like really dodgy guy. And he was like, his speciality was giving loans to people that had no docs, that were basically self-employed, had no income. It was just such an extraordinary time. And of course, like you say, you just kind of rode along with it at the time. That was the way things were done. And we are seeing that happen now. I wrote a little bit about that in my last sort of mail out. And then, of course, you're talking about the tax cuts. Absolutely, they're going to have an impact, on the sector, because it's going to allow people to keep going. It's going to allow people to hold on to their property. It's going to ease the budget for those people that want to buy. And we do still have, fairly low supply on the market. But all of this in the context kind of shows you what I keep, saying to my clients and subscribers, which is you just can't analyze the economy if you don't have that overview of the cycle. The cycle plays out, whether we want to, find some economic reason why it plays out or some esoteric reason why it plays out. There is a date of which it's going to play out till. And you mentioned copper prices going to all-time highs. The building materials in general are going to all-time highs. So, sand, I mean, the building material that's used the most is concrete. Concrete is reliant on river sand, on seabed sand. It's always short in supply. There's a massive black market for it. That's reaching all-time highs at the moment. And it's, people are talking, there's not a lot of building activity going on in Australia, but worldwide, the infrastructure projects that are being funded, particularly in the Middle East. So, we're looking at Saudi Arabia, their Neom city, I don't even know how to pronounce it. And then we've got the more publicity for the world's tallest. I think Taiwan is saying we want to build the world's tallest now. There's I think it's in Saudi Arabia where they're saying we're now going to look at building a 2-kilometer tower, which would be twice the size of the Burj Khalifa. I mean, and then there's great railways being built, and there's construction projects. My favorite channel, my
Yeah.
favorite channel on YouTube is the B1M.
B1M.
Like,
Yeah.
yeah, the construction channel where they kind of go and they look at all these construction projects. A massive amount of materials needed. Now that is, you know, when people get out of their little world of interest rates are going up, how can you afford housing? I can't afford it, housing affordability. The biggest cycle is saying inflation, war in the Middle East, supply line problems, massive building boom, inflation continuing, you know, budget cuts, tax cuts to help people afford, medium house price in Australia at record highs. Isn't that what we would, looking back in history, would say, whoa, this is a massive boom that's going on here? Wouldn't we say that? You know?
Yeah. I think that's been true since the COVID reopening. I think we will look back on this 2023, 2024, second half of 2022 as just this once in a generation global boom of everyone trying to do everything all at once. Yeah, I think that's true. Although I think I differ that I don't think it's accelerating still in a way that will generate more inflation. I think they'll be picking and choosing and scaling back. Like we see it in Queensland, this phenomenon of, well, the government's got their big infrastructure spend, so a lot of other people are scaling back their private developments because they're like, well, you know, I can't pay this ridiculous construction price to get this company to give up their cushy state government construction contract to take mine, right? And so there are adjustments going on there. And I think, you can see in Europe, a lot of countries are already close to deflation again in Europe. I think there's some Danish data out. So I think in Europe, it's pretty quiet. I think in Asia and the Middle East, though, the boom will be, and has been for the last booms as well, proportionally much, much bigger in terms of how much infrastructure and construction is going on. But I think globally, there's been plenty of adjustments so that the inflationary pressure from that surge has peaked. And the question is, what comes next? So I sort of have two what would we call it, scenarios that I entertain that, you know, I'm not wedded to one or the other. I think both are possible. One is this decline in the inflation rate just keeps going and we actually can't stop it. And we do, you know, that process is, you know, driven by collapsing spending and so on. And we do just head into the recession like the bank economists are suggesting in the second half of this year. That's one scenario. Another is that, like Australia, every other country is having this sort of end cycle stimulus thing. Tax cuts, adjustments to tax rates after the inflationary period, public works that were planned in the last couple of years now being forced out the pipeline into construction amidst all this other projects. And then we have this second wave sort of pressure build again. That's another scenario that I entertain. I think the 1970s is pretty similar. It was a two-wave inflation surge then. So I'm not clear which one is true or which one's most likely, or some combination of both. Some countries will see a bit of a second wave, others will just sort of flatten off and then fall. What are your thoughts, Catherine? Do you think which out of those two, which do you think is more likely? And do you have another scenario that you think is possibly more likely than either?
No, I mean, my scenario really is kind of tied also to the commodity cycle and just looking at what's going on worldwide in terms of regional conflicts, which are always threatening to become more global. And, you know, all of those have to do with, well, you know, resources, really. I mean, the attack on Israel is really an Iranian attack, and they want control over the supply lines in the Middle East. There's significant natural gas fields in that area. And then you've got, you know, the problems in the Red Sea, which is causing,
Yeah.
supply delays to materials. And then kind of like under, flying under the radar a little bit are the shops in Australia that are saying that they can't get hold of, furniture shops where they're having to put prices up because they can't get hold of goods still. It's not that there isn't, other factors that are coming in. I mean, I work with someone in the steel industry is telling me that he's always getting hit up from China, with cheaper prices and buy from here and buy from there. So it's not that there's kind of not ways around it which are enabling, things to go on. But I think overall the bigger picture for me is that that's why commodity prices are still increasing. And I would expect oil prices to, I would say that there is extreme upward pressure on oil prices. And if war does escalate, obviously that's going to be extremely inflationary as well. So my whole premise is that if everything over the last few years that has held me in good stead and got me this far to enable me to continue to write Land Cycle Investor is forecasting based on the cycle. And it wasn't without any kind of fundamental knowledge, but in 2019, I started to say, oh, look, Perth's going to boom. And then, Phil Seuss helped me with some charts where, it really looked like there was a cycle going on, so we could sort of look at it a little bit fundamentally. But all of those forecasts about the COVID boom, about, interest rates rising, war in the Middle East, all of those kind of forecasts that were sort of coming out over that period was made with this cyclical analysis in tow. And I really sort of feel that if I move away from that and get caught up in this debate of, are interest rates going to come down? And because it looks like this is going on outside the window right now, then we kind of lose our edge with it. I don't think that there is enough attention put in governments that there are these cycles that play out regardless. We can do as much analysis, as I said, as to why they play out, why they exist, why it happens like that, why there's certain timing elements to them. But if you look back historically, there is timing elements to it. And you have that in your book. You have there were those forecasters that I told you about, George Tritch and Samuel Benner, who was, George Tritch, who arrived from Germany to Denver in the 1800s and arrived a pauper and left a millionaire from trading. And I honestly think that he is responsible for that chart. I'll put it in the blurb when I write this up so people know what I'm talking about. But, wrote this chart that basically said, buy here, sell here, was also attributed to Samuel Benner, who was a farmer who got destroyed in the pig cholera panic in the 1870s, and then just dedicated his life to looking at booms and busts. And those charts are still forecasting pretty accurately the booms and busts that are happening now. So there is, whether you want to dispute it or not, there's a cycle. And if we move that out of our analysis, we're in trouble. But that's why I really feel that we've got, I would say 2025, and I don't know whether you agree with this, but I would say 2025, there is a boom coming, not only in property markets assisted by the tax cuts and whatever else, but also in commodity markets. And I would say that the RBA are going to have to keep increasing interest rates to the point where it does eventually break the cycle.
That is, that's another scenario, Catherine. I think that's a reasonable probability now that I think about it. I've been looking at houses recently, as I usually do. Yeah, there's still a lot of interest around in Brisbane. Interest rates, people I think are comfortable with now. And I just don't know. Yeah, I think there's potential for Melbourne prices to do a bit of catching up in 2025 because they've been pretty subdued relative to Sydney and Brisbane. At like quite a few places, their cycle was a bit out of sync. So I think there'll be a difference between Melbourne and other cities, and Perth obviously might continue for another year or so. That's a possibility. And I have, like if we're not going to see interest rates come down until there's a real macroeconomic reason for that. And I think that's what the banks are getting wrong. They are just thinking about much more fine-grained monetary policy. they're thinking, oh, if unemployment goes up slightly or this small trend continues, we'll adjust it. And I don't think that's how central banks in Australia or the US think. And I think we're a little bit subject to what's happening globally. I think they're going to wait for a real sudden change. Like, okay, now things are falling apart. Now we can rescue it. We didn't want to try and tinker, 1/4% here, 1/4% there. Which way is it going? We just want to, we're comfortable with where it is. If there's a little bit more of a boom, okay, maybe we'll just keep leaving it. If there's a little bit of high unemployment, we'll just leave it. And not until that point will it come down. And I don't think there's enough time between now and the end of the year for unemployment to rise, spending to wind back, all those processes to happen that happen, things happen before everyone panics, right? These processes build up like an earthquake. There's pressures that build up and then there's an earthquake. I don't think there's enough time between now and the end of the year. So I think you're right. It's quite likely there'll be another year of those pressures continuing to build before anything cracks. And of course, the timing will be slightly different in Australia compared to the US, compared to New Zealand. I mean, New Zealand's already seeing much bigger decline in new housing construction. The interest rate rise is a lot bigger. So maybe in New Zealand, by the end of the year, things will be looking bad. And we'll be talking about why Australia's never going to crash, or it doesn't seem to ever crash, but New Zealand is correcting. And we'll have that debate for a year until Australia crashes. Like, that's a possibility. But yeah, I think the banks are a bit premature. Like, you'll have to see more and more signs on the street of struggle before it hits the official data, and then before the central bank can respond. And I actually think that process really hits the listed asset markets, right? And then not until we really get that panic there that, all these anecdotes we see on the street, that rising unemployment, the tightening the belts, the construction orders slowing down, that realization sort of washes through the markets at once. And then that justifies to everyone else, oh yeah, we were right, things are getting bad, let's tighten our belts further, right? And that's when the central bank will come in. But then it's a little bit late because we've all realized we're having a crash. I'm not going to just start spending because the interest rate's low. It's a crash, right? I need to save my money, secure my job, pay down my house, right? So I look, those processes that I just described, I think, take a bit longer. And I think you're right. Between now and when that really gets to its end point, we can see commodities keep going up. It's really surprising increases in commodities. Lots of things that look unusual for those who are forecasting a decline, right? If you're forecasting low interest rates by the end of the year, you're pretty much saying inflation, like unemployment's spiking as we speak, right? And things are crashing as we speak, so that by the time this reality filters through to the data and builds enough to respond, I don't think that's true. What do you think?
I couldn't agree more. I think that you've just
okay, good.
I mean, I've been thinking that for a while. Like the only time you see interest rates start to be slashed, and they're always slashed in this kind of great hurry, is when the economy is in trouble. The economy is just not at that point at the moment. Sure, we have the fragments, but this is the part of the cycle. Rising land prices is inflationary to the entire economy for one reason, really. Economy is choreographed around the land market. Real estate agents are making money. The banks are making money from the competitive of the low market and rising interest rates. That means that that's having a roll-on effect to insurance companies, to furniture companies, people that need to sell sell materials for new properties and the whole moving industry, the whole real estate industry is a massive part of our economy. And so, and of course the stock market as well. And so when you've got this thing where you've got rising material prices, you've still got a huge amount of infrastructure that needs to be built in Australia, which was the part of the COVID recovery, was to fund governments committing all this money to fund infrastructure, of which we haven't got the materials in Australia and the labor in Australia to afford that, which means that we're having to spend more money to you know, bring more labor in to buy more materials. I mean, all of this is classic real estate cycle stuff, and it's not, you know, we're about to crash. It doesn't mean that you've not got rising rates in homelessness, and it doesn't mean that you've got fragments of the economy that are suffering. But that to me is like, you know, if we're expecting, and Leith, you know, when I interviewed him, I've interviewed him a few times, we laugh about it because he keeps saying, oh yeah, second half of this year interest rates are going to come down, and I just can't see that any reason as to at the moment why the RBA would be considering, you know, slashing rates, because it would just be an absolute light to the fire of
I mean,
the housing.
it's possible they might accidentally do it. They might preemptively go, and then everyone like jumps back into housing again, and it extends the cycle a little bit longer. I mean, I don't know if, you know, I mean, imagine if at the next meeting the Reserve Bank slashed interest rates by 1%.
I mean, the big argument at the moment, as far as I can see, and obviously, you know, I'm a little bit one-eyed because I'm always looking at real estate news. But you know, the big argument has been to come out from the banks and for the banks to say, you know, we're only allowing wealthy people to buy properties. We've got all these restrictions around lending and everything. And so what the Commonwealth Bank has done now is they say, okay, we're going to start, you know, going against those things that we implemented following the Royal Commission, and we're going to start paying our brokers higher commissions, and we're going to start, you know, finding ways, just like you were saying earlier, of how we can learn. So why would the RBA need to, you know, do any adjustment? I mean, the banks are going to find a way around it regardless, you know.
That's a good point. The puzzle with me and these bank economists, and I know a few of them, is that they actually have everyone's spending data. Right? They can tell you what people are spending their money on every day of the week. So I always have that in the back of my mind when they say, oh, things are getting bad. I'm like, geez, they know what payments are flowing out of everyone's bank accounts. Maybe they know something. So I think, again, though, maybe they can see a change in that spending flow, but I think they've missed that there is a economic process of adjustment that has to happen, which takes time once those patterns start changing. And they think it's like this instantaneous adjustment. And I think, oh, there's lots of other things that are going to happen macroeconomically. Like some people might be tightening the belts, but others are leveraging up and getting those new mortgages with a $10,000 deposit, right? So that the rest of the economy matters as well, or the composition matters. So that's where I think they're wrong. I always, when I say a bank economist doesn't know, I always remember that they can see everyone's transactions. So that, you know, you have to give them a little bit of trust on what trends they're seeing there. But I think what they're missing is, yes, the trend can change in the composition of what people are spending on, but then, you know, it might take a year and a half before all these other things change as well. And then we get the sort of panic situation.
Yeah, absolutely. I kind of want to give people that are listening to you sort of insight into your life a little bit, because you've got quite an interesting you go off to the Middle East and teach over there. And I saw you were telling some interesting stories to me about your kind of experience. You go over teaching university. Can you talk a bit about that?
So I'm a FIFO professor at Mohammed bin Salman College, which is a Western business school in Saudi Arabia. It's the first Western business school, all foreign academics, all taught in English, very similar to the MBA class that I taught at UQ in Queensland. And yeah, I mean, that's part of the modernization that's going on in the kingdom there. But yeah, I've been doing it the last couple of years. I'll be doing it again in the second half of this year. And you notice the speed of the change there. I mean, it's quite interesting as an economist thinking about the size of the construction sector, right, relative to the economy and how important it is. It's a whole different scale over in the Middle East, right? Construction is the economy just about. So yeah, it is. I think a region that is on a very steep improvement trajectory. That's what I've noticed. I've only been there for a couple of years, which is great. You know, it's. I think you'll find, yeah, lots of good things happening there over the next decade. I just hope the rest of the Middle East um, is stable enough for long enough for this economic modernization to play out, and yeah, it to be a much sort of more advanced and integrated global economy.
Yeah, I think what's interesting as well is that, as we get to like the end of the cycle, there's always this, well, there's the skyscraper index, which is the thing, the kind of
Oh yeah, yeah, yeah.
gets all this kind of publicity, and it's that the world's tallest. There's every cycle kind of has the world's tallest in it, and the world's tallest is unequivocally they open in a recession. And the logic behind it, I think it was Andrew Lawrence who first looked into this, economist who first looked into it. He did an interview quite recently. I'm going to link it in the blurb I send out with this, but he he went back to the 1800s, and he could recognize that there was this pattern that, the world's tallest would always open in this downturn. And he said, look, it's quite logical that they would fund it, when the economy looks like it's doing well and everything. And then by the time it's built and it opens, they open half empty. They get, people pre-buy them, but of course when they're opening in a recession, and people can't honor the finance. And of course the biggest most entertaining story, I think, was into the 1930s recession, when the Empire State Building,
that's right,
opened, because there was the Chrysler that was opening at the same time, and there was this race for who could be the tallest, and they were putting big spikes on the top of the building. And of course there's all those amazing photos of the Empire State Building where, the construction workers that worked on it without harnesses, and the steel workers and the iron workers, and just it was such an exciting time. But of course when it opened half empty, and it was nicknamed at the time the Empty State Building.
Oh wow,
kind of like the joke of it at the time. And I think this is the first cycle where we kind of get to the peak of the cycle, and where's the world's tallest is still the Burj Khalifa, because the Jeddah Tower was going to be the world's tallest. That's a third constructed.
yep.
I keep reading these news articles that they say, oh, it started again, but there's people on the ground that say, actually, there's nothing going on there. There's no construction going on there. It's just kind of a rumor going around in the press. And then, Taiwan's come out and said, we want to build the world's tallest. And on my favorite YouTube channel, the B1M, which I sit and watch, in the evening, so like eating dinner in front of the computer, watching this construction channel. But they had a video, and again, I'll link to it, where they were talking about the detail that goes into building the biggest tower. And it's like phenomenal amount of where, like, how heavy they are. And but anyway, he was drawing, I'm going off on this sort of tangent here, but he was drawing this correlation between which I've done before in Land Cycle Investor, because of course it is just a construction cycle. All the big construction projects always kind of tend to open at the peak of the cycle, including the Space Center, which is being built. There's a space, they're always kind of, it's not just things that they're building on Earth, it's things that they're building in space as well that they're adding to. And weren't you telling me something? This might just be leading nowhere now, I've said all of this, because I was kind of thinking you were saying something when I met, because after you'd done your talk at RMIT, we went out obviously and sat there still talking about real estate. And you were saying that hadn't someone kind of taken you on a trip there to see wasn't it a car factory or something? I feel like I've gone down a complete dead end. Don't you kind of because I think we were talking about the Neom, the city, like whether is there anything going on? Is it just kind of like this fluff and huff and puff that you see reading in the newspapers, and everyone says, oh, that's massive, that's massive, that's massive, but there's actually nothing going on there, when it's
there are a lot more announcements than construction projects. Neom, I know people who work there, and there's construction happening, but that region is totally undeveloped. So I don't think, the marketing material focuses on the end result, but the reality is they have to build an airport, they have to build a road, they have to build workers' housing, they have to, like, that stuff is happened and happening. So there's a Neom airport, people can get there, materials can get there. And so that's happening. Jeddah Tower, I will tell you at the end of the year, I'll be going to Jeddah, and I'll let you know. But last year when I was there, it was pretty clear that there was a contract to be signed with another European construction company to get that complete. So when that starts, I don't know, but there's definitely a commitment there to finish that. Yeah, and I mean, there's lots of other projects. Like the Middle East is full of projects, right? And it's very, it's different in some ways because there are different political motives and spending decisions, but it's similar in other ways because lots of them fail as risky decisions, and that's true of all market economies. So there's a bit of a mixed bag, but yeah, a lot of them are going. A lot of the stuff in the capital in Riyadh is going. It's a huge, like, absolutely enormous construction sites in Riyadh that are happening. The story I was telling you was about I think it was about the electric car factory that's in Cake, which is near Jeddah. So that's like the Sovereign Wealth Fund bought a majority stake, and one of the conditions was you've got to come and start building stuff inside the country so we can build up some domestic skills, which is quite funny because it's an example I use with my MBA students in our discussions about trade and industrialization and development, because Australia did the same things after the Second World War, protecting the domestic car industry from imports. So after you hit the quota of imported American cars, which mostly was, you could only import parts. And so that's where we got this domestic Australian car assembly business from, because you couldn't import completed cars over a certain quota for a couple of decades. So Holden went from making horse carriages to assembling American car components, and then that's how we did it. So that's the sort of story I use. And so, in a country that's trying to modernize rapidly, what do? You have to try some of these industrialization policies. I think the interesting question there is how linked is that investment going to be to the global trend, right? Are they going to be constrained in the next downturn and also scale back? Or are they going to, because they're very deep pocketed, actually use some of those idle construction resources globally and actually get some stuff finished in a reasonable time? I don't know. That'll be a conversation I'll have with the MBA class later this year.
Yeah, it's really interesting. Yeah, that's interesting information about the construction there. It's good to know that tower, that's what I had read in the press, that it was going to eventually, had
but it takes so long just to get organized, to get the first worker on the site. This is, I think, the thing, right? You can agree today, we're going to finish this. But between that and committing the money, you have to then go and order all the parts. You have to go and get your workforce from the jobs they're on. It might take a whole year before anyone shows up on the construction site, right? But in the background, there are orders happening for parts. People are putting it in their books, right? Oh, we're going to get this many concrete trucks here after we finish this job. So yeah, that's the main problem in the Middle East, is that they want to do so much all at once. It's just really tricky to do. And that's why things get delayed, blown out, cancelled, because it's a bit of like, let's just do everything. Let's just do it all at once.
Yeah, I think kind of what I want to point out as well is how bullish this is for Australia. I'm no mining expert by any means, but our sand did go to building the Burj Khalifa. It was Australian sand that was one of the major materials that they use. The thing is, in Dubai, is they're surrounded by sand, but none of that sand can be used in construction because it's the wrong shape. Basically, they need sand that's not round, not being rounded by the wind. So that's why they need sea sand. And of course, in Dubai, they're always going onto the seabeds and digging up sand to make those islands, city that they've made there. So Australia is kind of one of the big supplier of these materials. And so when you're hearing about these construction projects, that's kind of where I think, this is actually really good for the Australian economy. We are a mining economy, we are a housing economy. And so that's why you sort of see at the moment WA doing so well. I mean, people are very, pessimistic on what's happening in China, but China is a massive economy where they have huge construction projects that are underway at the moment. I just, the the WA economy, it's doing best in its housing market. It's got housing inflation there, still remarkably cheap housing compared to the East Coast. The agents that I talk to on the ground there cannot get enough listings. They're making hay at the moment. The ones that know about the cycle, I've got a subscriber, Ben Hatch, who contacts me quite often, who's a agent over there, who always says, you know, he's very aware that the end of the cycle's coming. What can you do in the meantime? But you know, their economy is stellar, really, compared to the rest of Australia.
Yeah.
It's got to be.
Well, yeah, I mean, if you're a buyer, you might not think that, but if you own property and if you work in mining, you definitely think that. Yeah, I mean, these are all the factors you have to sort of consider, because as we were saying before, every boom's got slightly different things, you know. I think in the 2000s it was oil that went really sky high. Now it's copper at record highs, but there's so the composition of different things, like which resource is the one, you know, the resource of
Copper
this
did
cycle.
reach record highs at the end of the last cycle, because of course 40% of copper is used in construction. So it's again, it's like noticing those patterns. We've got a construction, of course, in the lead up to, you know, interest rates were relatively low at that point. If you remember, like the construction boom into the end of the last cycle, and pushed through the first half, because that's the other part of this analysis is, if we're saying, okay, there's going to be a crash at the end of this decade, you know, I mean, I've got it timed as somewhere toward the end of 2026 into 2027, then we, you know, crash down into 2028. That to me is the timing that, if it changes, I'll let everybody know. But at the moment, for the analysis, that's kind of the analysis that I've been doing on the stock market and on the real estate market. Then, of course, you'll see a slash in interest rates, which means that building is going to become more profitable, which means that those building sites, which you can't turn into ready money at the moment because there's not a buyer market for it, are going to boom. And we should see a building boom into the 2030s.
Yeah, I think that's right, but there's going to have to be a bit of a correction before we get that next boom. That's exactly like last cycle, right? We have a bit of a correction, and the 2010s was just off the charts.
Yeah,
in construction, wasn't it? So
yeah, it was. I mean, that's why we should be celebrating that there's not, in the 2010s, everybody was like, oh, like all these apartment blocks that are being constructed, we're going to end up looking like Manhattan. It's going to be all these rabbit hutches and bog boxes in the sky, and we've got too many of them, and what a disaster it is, and rents are going nowhere. Do you remember that discussion? Rents are just so terrible, you know, we've got no supply of this. And now, of course, everyone's moaning. Now we've corrected that a little bit. Like, okay.
I mean, I've got that in my book. The headline, I think in 2017-18 was double whammy for investors, rents and prices falling. And we forget the cycle. No one believes me when I say, oh, you know, rents and prices were both falling for 3 years before COVID. And they're like, oh, is that right? I don't believe you. Okay. Don't believe me. It's your short memory. It's a skill to zoom out and see the cycle. Anyway.
Yeah. So it's kind of interesting. That's sort of how I see it playing out. We definitely will get a correction prior to that time, and you know, we'll see finance become easier. We'll see another building boom. But yeah, it's that kind of narrative, of course, that we recognize in patterns, which is what your book is all about. For
amongst many things, Catherine.
Yeah, amongst many things, and it's you know, it's important to read those I want as many people as possible to read books like that and to understand how the economy really works, so that eventually we can get rid of governments that sit in old economic models and force us to, you know, pay inefficient high taxes and you know, cripple our own finances and don't recognize cycles and don't protect us from economic downturns. So the more people that can kind of vote against the governments and people that have lack of knowledge, the better, as far as I'm concerned.
Terrific.
Yes. Well, thanks so much, Cam, for coming on. You know, I always appreciate it. And yeah, we'll obviously continue the discussion next time.
Yeah, let's do that. It was great to chat, Catherine. Good to talk.